Okay, have you ever looked at the news and it feels like two completely different worlds are existing at the same time? Well, that's exactly what we're diving into today. Because on one side of the coin, you've got Washington, D.C. in just complete and utter chaos.
Right. So in DC, it is a total meltdown. We're talking a high stakes blame game, politicians at each other's throats, and the government itself, well, it's grinding to a halt. But then you just hop a train a few hours north to New York City, and Wall Street is basically throwing a party, popping champagne. So what gives? How can a government shutdown be a full blown emergency in one place and just background noise in another? That's the big puzzle we're going to piece together right now.
All right, first things first, let's really get into what was going down in Washington. So, for the first time in almost 7 years, the U.S. government officially shut down. What that means is Congress just completely missed its deadline to fund the government. The clock struck midnight and boom, the White House had to tell federal agencies to start locking up. And the pressure here is just immense. I mean, you have hundreds of thousands of federal workers suddenly out of a job, sent home. And you can bet senators, especially around the D.C. area, are getting an earful from their constituents. Now, some folks are hoping this will be over fast. You're already seeing a few cracks in the ranks. But for now, it is just a down and dirty political brawl.
Okay, so let's shift gears because while Washington is completely imploding, Wall Street is having the time of its life. The difference is it's just wild. If you wanted to capture Wall Street's mood in just one number, this is it. The S&P 500, a huge chunk of the stock market, jumped a massive 7.8% for the quarter. I mean, we're not just talking optimistic, we're talking euphoric. And get this, it wasn't just a good quarter. That September was the strongest the market had seen in 15 years. We're talking record highs. On top of that, companies were borrowing money like there was no tomorrow. I mean, by literally any measure you can think of, Wall Street was absolutely on fire. So that brings us right back to the big question, right? What in the world was Wall Street looking at that made a whole government shutdown seem like nothing? Well, to get it, you've got to get inside the mind of Wall Street. And for them, this was like a rerun. They've seen this movie before, you know? Shutdowns, they're usually just temporary little blips on the radar. The real story, the main event for investors, wasn't the political drama. It was all about the Federal Reserve. The big bet was that the Fed would keep the money flowing, cutting interest rates to juice the economy, no matter what shenanigans were happening in D.C.
But, and this is where things get really interesting, the shutdown, this thing that everyone on Wall Street was ignoring, was creating this hidden problem. A quiet little danger that could actually pull the rug out from under their whole party. See, with the government shut down, a lot of key agencies shut down too. Think about the Bureau of Labor Statistics. They're closed. And that means all those critical economic reports that everyone, and I mean everyone, relies on, the official jobs report, unemployment numbers, poof, they just stopped coming. So what you get is this, an information vacuum. It's like the main dashboard for the entire U.S. economy just went dark. All the official gauges are dead. And that forced everybody to start looking at what you might call alternative data, things like private jobs reports or what companies are saying in their earnings calls. And suddenly, those little pieces of data became hugely important. And this whole situation puts one organization in a really, really tough spot. The Federal Reserve. Yep, the same Fed that Wall Street was betting its entire rally on. You see, the Fed has told us over and over and over again that its decisions are data-dependent. They need to see the numbers to make a call. But now, thanks to the shutdown, there's a whole lot less data for them to depend on. I mean, just think about it. The Fed needs those official job and inflation numbers to figure out if they should cut interest rates or not. But those numbers are just gone. It really is like they're flying a 747 through a dense fog with all their instruments turned off. They're flying blind. And that is a massive problem. Why? Because the market was totally 100% convinced the Fed was going to cut rates. Traders were literally betting on a 95% chance of a rate cut in October. That entire record-breaking rally we just talked about, it was pretty much built on that single assumption. So this all leads up to a single moment, the morning of October 1st. This is when the very first major piece of that alternative data dropped right into the middle of this information vacuum. The official government jobs report was a no-go, right? It was canceled. So every single eye, I'm talking the Fed, Wall Street, the whole financial universe, was glued to just one single report, the ADP private jobs number. And bam, this was it. The moment it all changed. The number was an absolute bombshell. Everybody was expecting a gain of around 51,000 jobs. The actual number? A loss of 32,000 jobs. That's not a miss. That's a catastrophe.
Oh, and it got even worse. They also revised the number from the previous month. What everyone thought was a healthy gain was actually a loss. So this wasn't just a one-off bad number. This was a trend, a very clear, very scary trend pointing to a weakening job market.
So let's circle back for a second. Remember how investors just shrugged off the shutdown? They thought it was all just political noise, a sideshow that had nothing to do with the real economy? Well, they were wrong, dead wrong. Because by creating that information vacuum, the shutdown made this one private report insanely powerful. And what that report was screaming was that the economy might be on much, much shakier ground than anyone on Wall Street had imagined. And that leaves us with this one final massive question. For weeks, it really felt like Wall Street and Washington were living in two totally separate realities. But the shutdown's information vacuum just tore a hole right through the walls separating them. The market had no problem shrugging off the political drama. But now it has to face a much tougher question. Can it shrug off an economic reality that it suddenly can't even see anymore?